Today's video is sponsored by Crown Credit Pro.
What's going on, everybody? It's your man Jay, man. You know, part of the Credit Plug family, and what we're doing right here, gotta give a shout out to Crown Credit Pro, because with the ability to get finance for certain vehicles, man, you will see what can change for you. You know, we dropped a video earlier, not too long ago. You know, just purchased a new 2021 C300 Mercedes-Benz. Got it in the dealership right now, getting some pre-maintenance work done. But because of Crown Credit Pro being able to clear, you know, a lot of, you know, negative marks and derogatory terms off of my credit report, I was also able to get maintenance financing through Sunbit. And what that does, that opens a primary account on your report, and the positive payments that you would have to make on your maintenance anyway now gets reported, and then, of course, in turns build your credit. So my advice is definitely tap into Crown Credit Pro, get a free consultation, learn what it takes to get your credit repaired, and also get some proper vehicle financing. And then, of course, with Sunbit, getting some maintenance financing as well. You got a lot of options with positive credit. Beautiful vehicle right here. We got a V8, you know, SUV Mercedes-Benz AMG. Okay, now very powerful vehicle. Got the G-Wagon right over there, and honestly, like, these vehicles are amazing, but they can be yours with the proper financing. All right, so Crown Credit Pro, thank you for allowing a lot of individuals to open the door so they can have more flexible options when it comes to their vehicle purchasing power.
What's up, YouTube? Welcome to the Credit Plug channel. If you haven't already, make sure you hit that subscribe button as well as smash the like button. So for today's video, what I really wanted to address is this infatuation with a Paydex score, right? And this isn't to knock building business credit. I'm a huge advocate of business credit, but I just wanted to kind of share with you what a Paydex can actually get you versus what it can't get you. And this is really just to realign people's expectations when it comes to building business credit, because what I see, and I get this question all the time, hey, Credit Plug, you know, I got an 80 Paydex score, but my personal credit is really bad, or I have a really low personal credit, but I have a Paydex score. What credit cards can I get with the Paydex score? And the answer is there's not many credit cards that you can get exclusively with a Paydex score. And I just wanted to walk you guys through this little exercise just so you get a better understanding. And again, this is coming from my own experience of building up business credit from business vendors, fintechs, business lines of credit. So in many cases, the Paydex score doesn't even really come into play. So with a Paydex, you're going to get business vendor credit, right? So you're not going to get business credit cards. Now, there's one credit card that you may be able to get by building business credit, but it's not even the Paydex. So I just want to give you guys some examples for those who might be new to business credit, don't quite understand. So I like to break business credit products into 5 different categories. Although there are more categories, but just for illustration purposes, you have business vendors. So these are going to be like Home Depot, Lowe's, Menards. Then you also have business credit cards. So these are going to be revolving Visa and MasterCard, American Express. Then you're going to have fintech accounts. So the Divvy, the Torpago, the Capital on Tap, the Brex, the Ramp. And then you're going to have business lines of credit. So these could be fintech business lines of credit or business lines of credit from commercial banks. And then you have the alternative space. So you have MCAs and other alternative financing. And I'm just going to walk through some of the data points that you're going to need for each of these products, just so that you're not disappointed when you build up your Paydex and then you try to get a business credit card and you find that the banks don't really even care about your Paydex score. So when it comes to the fintechs, right, these are just some examples of fintechs. You have Brex. I've done individual videos on this. You have Ramp. You have ClearCard is another one, Divvy, Torpago, as well as Capital on Tap, right? So these are fintech credit accounts. So these work more like charge cards, right? With the exception of Capital on Tap, you can revolve a balance. So all the other ones you can't, but with Capital on Tap, you just pay a 10% minimum option that they give you, or you could pay in full. But anyways, with the fintech accounts, those are really going to be looking at your cash flow, right? Not necessarily your personal credit. Now, they will look at your personal credit for verification purposes, but for the most part, the lending decision is going to be based off of your business banking activity. I've talked about this for 2 years. There's a fintech service provider called Plaid. You also have MX as well as Finicity. They're looking into your bank balances to underwrite you. So they're not looking at your personal credit, and they're not really looking at your business credit either. And then you have revolving business credit cards. So for example, American Express Business Prime credit card. I got the US Bank credit card. Webstaurant by FNBO did a review on this recently. These are just some examples, but just to kind of show you the difference between the fintechs and then the revolving business credit accounts. Now, with all of these revolving business credit accounts, that's going to require you to have a pretty decent personal credit score. Your Paydex is not really going to come into play when it comes to either the fintechs or the revolving business credit accounts. So with revolving business credit cards, those are going to require that you have a good FICO personal score. So if you have bad credit, but you build up your 80 Paydex, you're still not going to be able to get the Amexes and the Chase and, you know, all of those business credit cards. Having a 80 Paydex is not going to unlock that. Now, what will a 80 Paydex unlock for you? Vendor credit. So like Home Depot, you got A to B gas card, you got Shell Fleet, Cat Commercial, you know. So these are examples of vendor credit. So vendor credit are going to be credit that's issued from a particular vendor, usually a net 30. Sometimes you might have revolving accounts, but these are going to be non-Visa, MasterCard types of accounts. Now with Paydex or with Experian Business or, you know, any of the other business credit reporting agencies, you can build vendors, and using your Paydex score, you can be able to get approved for some of these vendors. But your Paydex is not going to unlock fintechs, it's not going to unlock revolving business credit, and it's not going to unlock business loans or business lines of credit. So I wanted to just go over this quick exercise with you just to let you guys know which data points are going to be relevant depending on the type of business credit account that you're applying for. So I have these different categories. You have business vendor credit, business credit cards, fintech business cards, BLOCs, which stands for business lines of credit. And this also includes business loans. And then you have MCAs and alternative business financing. So MCA is a merchant cash advance. Now, when it comes to business vendor credit, having a good personal credit score is not necessarily required, right? So I'm going to say it's optional because in certain instances, you can personally guarantee for vendor credit, but it's not required that you have to have an excellent personal credit in order to qualify. Now, when it comes to business credit cards, so these are revolving business credit cards, the Amexes, yes, you're going to need good personal credit. Now, with the fintech business cards, no, you're not going to have perfect credit or excellent credit. You will have to provide your social security number for verification purposes, but the lending decision is going to be based mostly on your cash flow. So no, when it comes to fintech business cards, your personal credit isn't going to matter as much. Now, I would say with the exception of maybe Capital on Tap, because they do a soft pull, but Capital on Tap is slightly different from like the Brex and the Ramps because you can actually revolve a balance. And this is another key point I wanted to make as well. Typically, when you have revolving accounts where you can revolve the balance, those are usually going to require a personal credit check, either a soft pull or a hard pull. Now, the reason why that is that usually people are going to be more careful when it comes to their personal credit. And when you're revolving a balance, for the lender's perspective, that's actually going to be more risk because it's taking you longer to repay versus like some of these net 30 accounts with business vendors or some of the fintech business cards, which are essentially net 30s, the lender's getting their money back in a shorter period of time. So there's less risk. So that's why you have with like a Capital on Tap, they do a soft pull of your personal, and they also have the option for you to revolve a balance. Now, with some of the other fintechs, they're not soft pulling your personal credit to give you a lending decision. They're just doing it for verification. They're looking at your cash flow. So as long as your cash flow can justify the underwriting decision, then you're going to be good with most of the fintech business cards. But when you're revolving a balance, like with business credit cards, they want to know how you're managing your personal credits. So you definitely need to have good personal credit to apply and get approved for business credit cards that are going to allow you to revolve a balance. Now, when it comes to business lines of credit, your personal credit is also going to come into play. Now, when it comes to business credit, right, your Paydex, your Experian, your Equifax, CreditSafe, business vendors are going to be looking at that. So yes, and again, this video isn't to knock a Paydex score. I think you should build your Paydex score, but don't neglect your personal credit. And I just want to set the expectation in showing you what data points are going to be relevant for what types of business products. So with business credit cards, your Paydex is going to be supplemental information, right? In fact, American Express actually does a soft pull of your Dun & Bradstreet, right? So they will actually know what type of information is reporting on your business credit file. However, that's not going to be the main driver of the lending decision. They're still going to use your personal credit as the main driver, the main data point that the decision is being made upon. So yes, even though they might look at your business credit alone by itself is not going to get you the approval. Now, I would say with fintech business cards, I would say it's the same way, right? Supplemental. With business lines of credit, I would say no, because business lines of credit are really going to be focusing on your revenue as well as your financials, so they basically want to see what your business income is like and then what type of personal credit score that you have. So now when it comes to revenue / cash flow, business vendor credit, it's not really going to come into a play. Now, usually if they do ask you what your revenue is, it's just going to be stated. I haven't seen any business vendors that actually ask you to provide bank statements. Now, with business credit cards, optional or on a case-by-case basis, because most of the time it's just going to be predicated on your personal credit. Sometimes what certain lenders will do is they'll do what's called a 4506T after they approve you. So maybe a year, 2 years later, they might do that. Now, when it comes to the fintech business cards, yes, revenue is going to be a big decision maker when it comes to getting approved for fintech cards. Again, they're going to be using Plaid, MX, Finicity, so they're going to get real-time access into your bank balances. So absolutely, I would say that's the main driver of the fintech cards. Same with business lines of credit and same with MCAs and alternative financing. Now, when it comes to tax returns, right? Business vendor credit, that's not going to come into play. Business credit cards, again, I'm going to say case by case, but this is rare. So I'm just going to put rarely. Business fintech cards, no, generally not. BLOCs, yes. I've actually experienced that with several business lines of credit. Wanting to see the last 2 of your tax returns. And actually, this is going to be common for most commercial lenders when it comes to business lines of credit, business loans, is going to have a higher underwriting threshold than a business credit card. Financials, when it comes to business vendor credit, no. Credit cards, no. Now, when it comes to fintech business cards, your financials will come into a play in many instances. A lot of applications will ask you to plug in through your accounting software, so like a QuickBooks. So instead of you actually providing, physical financials, they can just plug directly into your accounting system and pull out all the required financials that they may need, things like your balance sheet. Business lines of credit, yes, they're absolutely going to ask for your financials. All right, so one of the things I really wanted to highlight with just going through this exercise are what are the data points that you're going to need when it comes to different business credit accounts. So as you can see right here, when it comes to revolving business credit cards from commercial banks and credit unions, your personal credit is going to be one of the main factors. When it comes to your Paydex, I also wanted to highlight what it's able to get you and what it's not. So when we're looking at this, yes, business vendor credit you can get, but business credit cards, fintech business credit cards, It's only supplemental information. So it's not the main data point that's being used. So overall, I just wanted to let you guys know what data points are going to be relevant depending on what type of business credit account that you're applying for. So I see this a lot where people have this idea that just because they have an 80 Paydex score, they're going to get business loans, business lines of credit, business credit cards, even with bad personal credit. And I'm here to tell you that it's not going to happen. And this is coming from my own personal data points and experience of going through different applications and actually speaking with dozens and dozens of different lenders. They really don't care about your Paydex score when it comes to business loans, lines of credit. Now, that's not to say that you shouldn't build up your Paydex. Your Dun & Bradstreet Paydex should not be the only data point that you focus on as a business owner to position yourself to get approved for different types of business credit products. Because again, in most situations, your business credit score, your Paydex score is only going to be supplemental information. You can get business vendors, and there's a lot of value in doing that. The Home Depots, the Lowe's, the Samsungs. You absolutely should build your business credit, but don't neglect your personal credit. And if you really want to be able to navigate the business credit landscape, then you really want to have all of your data points in good standing. So not just your business credit, but more importantly, your personal credit. And in my opinion, your personal credit is actually going to unlock more business credit than your business credit scores. So you want to focus on different data points besides just your Paydex, because if you have a good Paydex, but you have no revenue and you have bad personal credit, then you're still going to struggle with getting credit cards and loans. And actually, you're going to be really restricted to only getting business vendors. And there are limitations with business vendors because you can only use those accounts at that particular vendor. So when it comes to scaling out your business by having other sources of capital, you're going to be very limited. So what I would recommend, continue to build your Paydex, continue to build your business credit, but just understand that it's not a shortcut and it's not an alternative to having bad personal credit. If you have bad personal credit, I recommend you go holler at Crown Credit Pro. I've dropped a link in the description of the video. They can get you straight. And when it comes to applying for different loans, business lines of credit, especially at the commercial lenders, they have a zero tolerance for derogatory marks or collections. So what you want to do is clean up your personal credit, because when you clean up your personal credit, that's going to put you in the best situation to get approved for a lot of different business credit cards, revolving accounts. And I was able to do that very early on by leveraging my personal credit to get Visa and MasterCards on the business side, not my Paydex, but my personal credit. So if you have bad personal credit, I would suggest you clean that up. Crown Credit Pro is one of the best in the industry. They can get derogatories, collections, late payments, get you in the position so that you can qualify for the Amexes and the Chases and the US banks. So anyways, that's all I wanted to cover in today's video. Let me know your comments and questions in the comment section below. Until next time, take it easy and we'll talk to you soon. Peace.